Mr. Loo, you talk so much about US stock market. Can you talk a bit about the Singapore stock market now? What's your view of Singapore stock market? How should we play in the Singapore stock market? So, ladies and gentlemen, this is going to be my humble opinion of what I think our strategy should be in the Singapore stock market. So let's watch on, shall we? So I've entitled my talk today, Taking Stock of Our Singapore Stock Market. And I've got a 4-letter phrase for it, okay? SBJL. And y'all can guess what SBJL is. Please let me know now, but I'll give you the answer for SBJL at the end of my talk. As usual, these are my disclaimer. Okay, please read on and let's go. Congratulations to all who have taken a position in the NASDAQ. I've always taken a position that I will invest in a 2/3, 1/3 ratio. So 2/3 in S&P 500, 1/3 in NASDAQ. So now that NASDAQ hit a all-time high, congratulations to all that has made a lot of money. But today's talk is not really on the NASDAQ, but I thought this is an important point I want to stress to everybody that the NASDAQ 100 has hit a record high. So how are all the stock indexes doing across the world, right? So I think it's good to take a chapter now and see how does the Singapore stock market fare with respect to these stock indexes. So this is the 1-year performance of the US and Europe stock index, okay? So S&P 500 went up by 27% this year. This is remarkable. Italy has went up by 20%. It's surprising to me because I've always looked not very high on Italy. Germany has went up by 16%. France has went up by 10%. UK has went up 8%. Why is the STI gone up by only 3%? So the STI is closed somewhere around 3,300 points to date, but it's a far cry from all the other stock market, right? So it's a big letdown, isn't it? But maybe the 1-year time frame is too short a time frame to compare. So let's take a look at the longer time frame, shall we? So let's look at a 20-year time frame, right? If you look at 20-year time frame, wow, the Italian stock index really performed quite badly. It's 28% only. So it's always good to look at the long-term performance. The STI is not too bad, went up by 85% over 20 years. 20 years, 85%, the return rate are pretty miserable, to be frank. UK is not doing much better, right? UK is only up 5% above us. So France is not doing too much better as well. So Europe, it's actually France, UK, and Italy all doing so-so. So in that sense, we should pat ourselves on the shoulder. Actually, our STI index, Straits Times index, is actually not so bad. Of course, the US S&P 500 went up by 300%. Surprisingly, Germany has gone up by 380%, right? So the German index is probably one index that we can also look at for compounding effect as well. So this is 20-year results. But let's extend our horizon now to look at other regions, shall we? Let's look at Hong Kong, China, Korea, and Japan. So Japan, surprisingly, for this 1 year has gone up by 26%. It's a interesting performance because Japan has just been suffering economically for the last 30 years. I don't think they will get out of it because the population is just falling and falling and falling. The yen has fallen to a record low, but the stock market surprisingly has gone up by 26%. Korea has went up by 7%, which is quite remarkable. Our STI is 3%, so-so. We are not too bad compared to the Chinese stock market, specifically Hong Kong and Shanghai, which is registering flat or negative. But again, right, you're looking at 1 year, maybe spurious performance. Let's look at 20 years, shall we? If you look at 20 years, Japan is not doing that bad. Went up by, 200%. Okay, Korea went up by 200%. Shanghai went up by 100%. STI 85%, Hong Kong 61%. What surprised me was Hong Kong. I thought Hong Kong would have gone up in the same breath, almost in the same extent as China, but it didn't. So from that perspective, Singapore is not doing much better with STI. Let's take a look at Russian and India, shall we? So Russian stock market, despite all the chaos that's happening in the country, has went up by 32% this year. That's surprising, right? 30%. How did the stock market went up 32% with so much sanction, with so much war and going on and things like that, right? That beats me. The Indian market has went up by 19%, right? So I think generally this year everybody has just gone up, okay? Double-digit growth and things like that. Why is the STI stuck at a miserable 3%? This beats me. Again, right, if you look at 20 years performance, India went up by a astonishing, 1,455%. Russia went up by 550%. STI, 85%. Now, also here, I want to take note of where this one does not look at the exchange rate effect. So maybe if I adjusted for exchange rate, the gap would have been closed up a lot more. I don't have the number here, but but in their currency, I think this currency has gone up. The Sing dollar is pretty strong, so maybe if we adjusted for it, the gap will be closer, but still, it's not going to close up by that much that will wipe out all the gains. Okay, so let's look at our Southeast Asian neighbors, shall we? Malaysia this year has gone up by 14%, although ringgit has fallen quite a lot. So between the rise in the stock market, but the fall in ringgit maybe cancel each other. Indonesia 8%, Philippines 1%. So Southeast Asia collectively not doing much better. Okay, although STI is still at the miserable 3%, but our neighbor has gone up a lot more. If you look at 20 years time horizon, okay, again our STI ranks far below, right? Indonesia, Philippines, Thailand, Malaysia, all is above, gone above us. I would say that Thailand, and if you adjust for exchange rate, I think Malaysia and Thailand will have fallen below Singapore. So Singapore, in that sense, over 20 is not so bad. Okay. My view is that the Straits Times Index, okay, which is a proxy for the whole Singapore stock market, is just a super terrible index. I've said it, okay. I don't know, 6 years ago, I said it, recently, I'm going to say it again and again. It's just a super terrible index. It has crashed from 2007, it reached a 3,000 points. It has just crashed and never recovered since then. How can it be so bad, right? It's just crashed and never recovered since then. Right now we are 3,300 points. This is a long, I don't know, easily 16 years really. 16 years wait. 16 years is a terrible long wait, just a terrible long wait. How can we be so bad for a long time, right? Well, the main reason is that the STI index is made up of its component stocks, and all component stocks, a lot of them are in a sea of red, right? Okay, so I just pull out some stocks here. The only exception are the local banks. Okay, if you take out the local banks, most of the other Singapore stocks are performing terribly. Those blue chip stocks are not blue chip stocks, they're blue black stocks. And right now, no, all bakak, right? Blue black stocks. So fortunately, our banks are doing well. I do have some OCBC, thank God, bought many years ago. I was very young, I bought it at $5. Now today, I think it's doing very well at $14. But I don't have enough of it. Doesn't move the needle. With the exception of that few counters, the rest of the Singapore stocks, majority of them, are doing quite badly. If you want to do well in the Singapore stock market, you need to be a good stock picker, excellent stock picker, especially for dividend stocks. With the exception of a good stock picking, dividend stocks, especially the banks, most of it are done really badly. Worthwhile to pull out Singapore Telecoms just because I used to work there. I worked there since 1997. The Singtel stocks I hit an all-time high around $4.40. I remember everybody was so proud of Singtel, and unfortunately today it's at $2.40. Take note, 2005 it was around $2.40 plus cents. Today is at $2.40 plus cents. So which means that for 20 years, if you held the stock, apart from dividends that you've gotten, the stock has absolutely made no capital gains. Okay, so this is a result of technology disruption, and I don't think they're going to recover from it. This is my personal opinion. So why is it like that? Why is the Singapore stock market so bad, right? Well, the fundamental reason is that we don't have fast-growing technology stocks. Okay, this number one, the main reason. Our good technology companies like C, Grab, all these companies, they don't have list here. They went to US because Singapore stock market is a lousy place for tech stocks to list. They list in US stock market, they raise a lot of liquidity. The main reason is that if you list a company in Singapore, you can only raise that much. It's a very small market. But if you raise in US, the capital market can raise it a lot. So they can get a lot of liquidity from a US stock market. So why would they list here? So as a result, through this attrition, most of the good companies will list overseas, and not so good one will list in Singapore. As a result, the Singapore quality of companies just gradually become worse and worse. So, the SGX stocks become more and more disappointing as a result. There's also a gradual loss of investor confidence because of what I mentioned earlier, but also, over time, they have got bitten again and again by other past cases. If some of you are old enough, you remember Klopp, 1990s, people have never recovered from their losses. S-ship scandal, those Chinese stocks, they have lots of scandals for 10 years. It was bad. 2013, there's a penny stock crash. So much of all these little things, all this adds up to little confidence losses. So what's next for our stock market? There was a news article that came out, Singapore battles to revive struggling stock market. So this is not Mr. Loo say our stock market is struggling. Right? A lot of you all fight with me and say our Singapore stock market is not so bad, not so bad. Yeah, you only buy DBS, OCBC, and UOB. Not mainly, right? Some of y'all are very good stock pickers, good for you, right? But majority is bad, not I say one, right? The news article say one, right? There were some ideas being raised, okay? The Singapore Venture and Private Capital Association raised proposal that they will to boost our Singapore stock market. There were some proposals submitted, not confirmed. Let's look at some of these proposals. Number one is that, if you want to set up a private capital firm in Singapore, you must, have some local stock market participation. So you're forcing private equity firms and family offices and other wealth management business. You want to set office here, you must, invest some in Singapore stock market. So this is my opinion, not something that will help our development of our financial market, because if you do that, the private capital companies will just go to other places. It's very protectionistic kind of measure. And it's actually quite dangerous, right? Didn't Malaysia just mooted this idea as well, forcing their local firms to invest, the Malaysian companies to invest? I think it's a lousy idea. If you force these companies to participate in the poor returns, they just won't come here. As a result, we lose jobs, we lose funds inflow, and just kill ourselves, right? So I think this is a lousy idea, in my humble opinion. The other idea is to allow pension funds like the CPF to be invested in our Singapore stock market. But today, the CPF already can be used for many of our Singapore stocks if you want. But I think it's a lousy idea, because you are encouraging Singaporeans with their precious CPF to be invested in the stock market, which traditionally have returned very poor returns. It's a very dangerous move. How can you encourage ideas such as this to put the precious retirement money of Singaporeans, hard-earned retirement money of Singaporeans, at risk? I think this is a very, very dangerous move. I think the fundamental reason, in my humble opinion, why the Singapore stock market is so bad is because the investors are majority Singaporeans. What are Singaporean investors? Dividend-seeking, risk-averse, kiasi, right? Okay. And kiasu, right? So you want growth and you want dividend. In exchange, if you have to choose between two, you choose dividends. As a result, all the high growth company won't come. If the high growth company won't come, guess what? The whole Singapore stock market will just spiral downwards, right? So whatever you do, I don't think it's going to make things work, okay? So all the ideas that I've seen so far, I don't think it's going to solve the problem. So the underlying problem is a cultural, behavioral problem, that the investors are just not rewarding, not seeking high growth companies. So this is what I call SBJL. It's called Si Pe Jalat, right? So it's a Si Pe Jalat stock market, right? And nothing we can do about it if it's culturally this way. So this is my opinion. A lot of you are going to challenge my thought. Every time I talk bad about Singapore stock market, I've always invited a lot of people. Mr. Loo, you're a lousy stock picker. You don't know how to pick stock. You don't know how to pick Singapore banks, which I do some, okay? And you just don't understand the Singapore stock market well enough. The STI, doesn't represent Singapore stock market. That kind of things will come out. I'm happy to hear opinion, okay? Anyway, let's have this gentleman's discussion in the comments or in my Telegram group. And for those who have made money in the US stock market, congratulations again. For those who are still stubbornly sticking to the Singapore stock market, good luck to you, and I'll see you in a day or two. Bye-bye.